This week, global stocks are down 14% from their all-time high in January. We also saw the 31-month low for the Shanghai Composite as Chinese stocks had another ugly week, the third biggest weekly drop since January 2016. European stocks were all lower too, but of course, U.S. equities headed higher again. The Dow and the S&P are now up 6 weeks in a row. Note, the Nasdaq ended the week lower. Tesla was pounded. FANG stocks were ugly too. But Apple is soaring to new record highs, holding well above the trillion-dollar market cap level. 10-year yields ended the week unchanged. Another week, another flattening in the yield curve. The dollar index ended the week modestly lower. The Turkish lira surged over 6% after last week's 25% plus collapse. And lastly, commodities ended the week lower, but the last 2 days have seen a notable rebound. But for me, the big news was something else. Did you notice? Did you hear anything? Did you see anything? Probably not, but that's okay. That's what you pay me for. What you may have missed is the market may have changed this week. So what happened this week that may have changed the market? Well, the big boys came to play. You can't hear them, you can't see them, but you can follow their footsteps. You won't hear this in the mainstream news or likely from any other YouTube channel. Do I have your attention? Well, let's take a look. Before we take a look at my observation, let's do a quick checkup on the S&P here. This is the 6-month daily chart on the S&P. We closed Friday at 285.06. Last couple of days started heading up after a bounce above the 50 EMA. It went through the 20 EMA but bounced above the 50 EMA, and then we're heading on up. It's not real strong, but it looks like we're going to continue on up. And that is shown here in the MACD, where the fast line has come through on the underside and is heading on up. There's a possibility of a reflection sometime, say, mid next week, and it's kind of hard to tell exactly what's going to happen when you get into these middle areas, such as shown here in the histogram, that you're above and below the zero line. So there's not a lot of strength in the direction other than, say, sideways. But I think the probability is we continue on up and reach toward that previous high from earlier this year. And that is shown here in the price rate of change. We're crossing up from the below through the slow line, and I think that's going to continue on up, as well as the RSI and the stochastics also. The fast line's moving through that slow line there. Volume is fine. And then lastly, the Williams looks like it's heading on up. So I think the probability is that the price will continue on up and test perhaps that previous high from earlier this year. All right, let's go to my observation. What we will first look at here are the triple Qs, and in your stock chart settings, what I've done down here is the time frame. We're going to look at 15 days, and the frequency we're going to look at 30 minutes. So reset the chart, move on down. All right, take a quick look at the chart. What do you see? Do you see anything unusual? Well, maybe not, so I'll point it out. It's right here. Nice little arrow. Basically what happened is this here was Tuesday and this is Wednesday. And Wednesday was the bond redemption. That's your quantitative tapering. It happened in the morning, and I think the measure was somewhere around $50 billion that was being redeemed. So that's what happened. The market actually opened up slightly, and then all of a sudden it took an elevator down. And it was primarily in the NASDAQ. It didn't hit all sectors the same, primarily in the NASDAQ, and it hit a lot of your high-tech companies. We'll go take a look at a couple here shortly. But as you can see here, the moving average, the 20 EMA is moving on up here, and it was coinciding with the 50 EMA, but then all of a sudden it takes that sharp turn. I've been watching this. The previous redemption went off without a hitch a while ago, and I've been watching this just to see what happens. And this redemption here was the first time that there was a negative reaction by the market. So I think that the stresses may continue to build the more redemptions we have, the further along the schedule we get. But it happened right here, and we recovered relatively well. And then what happened is, I think because of that, and at the end of the redemption, I think some bigger funds started selling off some of their stocks. We'll take a look at that too. But you can see this right here. It's a very sharp turn. Most of the time you get a nice little turn. They're not real sharp, but this one is a lot more pronounced. And then of course you can see the sell-off that happened relatively quickly within the first half hour, hour at the most of the market. Boom, down you went. Take a look at the MACD. You can see it here in the MACD. At this point there, a real sharp turn, and the market headed on down. Let's go take a look at Apple. So this is the same 15-day, 30-minute chart on Apple. And what do you see? I don't see anything. So Warren Buffett, he's got the golden touch. Apple sailed right through it without any problem. Let's go take a look at another chart. This is a 15-day, 30-minute chart on Google or Alphabet, Class C capital stock, symbol GOOG. Now, Google was impacted, and you can see it right here. On Tuesday, everything's fine, and then all of a sudden, Wednesday morning, it hits, and then elevator down. So Google fell, 10, 20, over 30 points. Subsequent rise in the stock, and then the next day, I think the funds started selling off. They got scared. So you see it there in the price chart, and then again in the MACD right here. Sell off, or rather the redemption, and then there we go. Let's go just take a look at one more tech stock. And this is the 15-day, 30-minute chart on Netflix, and the symbol is NFLX. And you see the same thing as in Google. Tuesday was just fine, just dandy. All of a sudden, Wednesday redemption comes along, and there the sell-off, subsequent attempt at rising back up again, and then funds or retailers get scared and sell off. You see that in the price chart, and then you can see the whipsaw here in the MACD at that point right there. So I think you kind of get an idea that we need to pay attention to these redemptions, because I think things are changing in the market. You won't hear that anyplace else but here, so I suggest you subscribe. So for today, that's ChewDog Charts. Thank you.